You trying to learn about candlesticks? Let's get right into it. All right. So when you open up a chart, and what's the first thing that you see is these things called candlesticks. The little lines on the chart are called candlesticks. All right. There are two kinds of candlesticks. There are bullish and there are bearish. Right. So what's the difference between the two? This candle price opens at the bottom and then it closes at the top. It makes a low and it makes a high. Okay, and that is a bullish candle. Right. You have the bearish candle. The only difference is that these two flip. Price now opens at the top and closes at the bottom, but still makes a low and a high. Okay, that's a bearish candle. That is the anatomy of a candle. How it opens, how it closes, how it forms. And the difference is the bullish and bearish. Okay, so bullish means up, bearish means down. Also, each candle represents whatever time frame you are trading. So if you are in the 1 hour time frame, each candle will represent 1 hour of time. If you're on the 4 hour, it'll be 4 hours of time, so on and so forth. So also, you have the candle body. Just in general, I didn't blank because either way, the big part of the candle is the body. The small part of the candle is the wick. That's it. So, when do you see bullish candles? Bullish candles you'll see come from a support. And you'll typically see like strong candles, right? You'll see strong candles form like this. Notice how the candles continue to open at the bottom and close at the top. They open at the bottom, close at the top. Open at the bottom, close at the top. That is because price is in a uptrend.
And price is going up.
As long as price continues to do just that, open at the bottom, close at the top.
Open at the bottom, close at the top. And continue doing that, price will continue going up.
These points earlier that we said highs and lows are important because they represent where price is making higher highs and higher lows. And in an uptrend, price has to make higher highs and higher lows. It has to. And what am I talking about higher highs, higher lows? I'm talking about the high points and the low points. Each time each candle opened, it made a higher point than the previous candle. See that, where it broke the previous candle high? If it were to continue going up, it would make another higher high, right? And continue breaking highs. As long as price is breaking highs, it is in an uptrend. Breaking highs and also respecting the lows. As long as it doesn't go below the previous low points of the candles, it will be in an uptrend. Same thing with the downtrend. Only price is coming from a resistance right here. Resistance. These zones are just points in price where it is most likely to reject. And a resistance, price is most likely to reject down. A support, price is most likely to reject up. Okay, that's the best way you can keep these in mind. Okay, so from a resistance, you will see red candles, or whatever color you have your bearish candles. You'll see bearish candles forming. And how do we know they're bearish? Because they open at the top and they close at the bottom. And they open at the top and they close at the bottom. Same time, price is making lower lows and lower highs. Price continued to break these lows, so it may have a high probability to continue going down and continue breaking the lows. There are really only two kinds of candles. There are bullish and bearish. All right, and there are variations of those. There are strong variations and there are weak variations. So let's get into it. For starters, you have like your bullish candles, right? These are your strong candles. Whenever they're big body, you got big body candles. That's a strong candle, right? This means that there is high volume. High volume. Okay. Now they're bullish candles, they're high volume candles, but what happens when you see a candle like this start forming up here, like right after this, you see this. Clearly, these are different candles, right? And you want to take this as a sign to slow down. Pretty much that volume is slowing down. Right, volume slows down when you see small candles like this. These are smaller candles, not as big body like this. This has a small body. Right? Small body candles are like weak candles. Weak candles equal low volume. And as a trader, you need volume to execute trades. Once you start seeing it over and over again, enough times, you'll start to recognize, oh, this candle means this candle means that. But at the core of it all, there are strong candles and weak candles, and that is it. That truly is it. Okay. The same thing with the bearish candles is that you have the big body bearish candles, but then you can also have small body bearish candles. All this means is that now that this candle has presented itself and closed like this, it means that there is low volume. That's all it means. Okay. So, and really, I'm breaking down how you can read the fucking market, fam. Like, I'm breaking the language down to you right now. The anatomy of candlesticks is at the core of everything. Okay, so honestly, this video is one of the most important videos, because if you don't know that, oh, price is breaking lows and respecting highs, then you're gonna see this candle and be like, oh, I'm gonna try to buy from here. But then price keeps going down because you don't understand. You don't understand that there's a trend, right? Price is going down. Until you see a violation of the previous high in a downtrend, you're in a downtrend. But you wouldn't understand that if you just open up the charts. If you just open up your Robinhood and place buy. If you just open up Robinhood and place sell. You know what I'm saying? Just because so-and-so said to do it. Like, I almost forgot one. Candles with no wicks. All right. So you have candles with no wicks, right? Or you have the candles that have wicks, right? And then you have candles that have no wicks sometimes, just like that, right? What this represents is that when this candle opened, it just went straight down. It didn't even go up. Like, it didn't even go up. So that means that there's a lot of selling pressure on this candle. That means that there's now a higher probability for the next candle to potentially form and go down, right? And it'd be the same thing if you saw like a bullish candle with no bottom wick, right? With no bottom wick. That means that as soon as this candle opened, price just went up and then it closed right here. It never even continued going down. It said fuck the lower prices. We're taking price up now. Okay. Now, you will also see candles with no top wick or bottom wick, just like this, right? When you see candles like this, it basically means that there are two strong points in price right here. And there is a higher probability for price to be ranging.
Okay. And also, if you see an uptrend, like say price is going up, and then you just all of a sudden have a candle like that, that could also mean that price is going to start slowing down right here. And you'll start having some kind of consolidation right there. Boom. Candles with no wicks. Alright?
Alright guys, let me know what you think about the video. I hope it helps somebody out. I also hope it helped you realize that trading is really more simple than it seems. It really is. It seems more complicated because of the screens, the charts, the numbers. There's so much going on. But once you break it down to the core principles, like the core understandings, just like breaking down a language, you learn the letters, then you learn the words. It's the same thing with trading. Once you've broken down how to read the candles, everything becomes much more simpler. You start recognizing patterns faster and start understanding where the market is actually going. But yeah, let me know what you think, and let me know if you like these videos. I'm gonna try to put more out for sure on just how I trade. This is how I read the market. This is how I read candlesticks. Yeah, peace out.